On the eve of Election Day, let's take a look at the 5 best performing S&P stocks since Hillary Clinton and Donald Trump were both in the race. That goes back to June 2015. The stocks would be Nvidia, Amazon, Activision Blizzard, Tyson Foods, and Newmont Mining. So what, if anything, can we learn from the surge in these stocks? Welcome to Trading Nation. I'm Eric Chemi, joined by Gina Sanchez of Chantico Global and Rich Ross of Evercore ISI. Gina, let's start with you. What are your thoughts on these stocks and what it means for the campaign and what it means going forward for some of these companies?
Well, I think if you look at the stock of all of these 5 that has the best outlook, in my opinion, it's Tyson Foods on fundamentals. And to me, the story that I take out of that is it is also the most defensive stock of those 5 stocks, which basically tells you how nervous these stock markets have been. Nvidia, Activision, Amazon have all really gotten out over their skis. They're starting to miss on earnings, and there's still some vulnerability there. So while they've had tremendous moves, they have the potential to fall back. And Newmont Mining has really been on the back of commodity prices in China, and that's probably not sustainable. I think Tyson Foods has the best outlook, and I think it tells you that the stock market has been very, very defensive.
Rich, what about you? I know you're looking at these same names, especially Newmont, but what are your thoughts on how the technicals shape up for these 5 companies?
Yeah, it's quite a motley crew we have there, where we have Amazon and Nvidia and Activision on the tech side. As we know, that's been the strongest sector year to date. It's growth in a low growth world. But I think Newmont, to the downside, is really the play here, and this encapsulates a lot of these macro cross currents. So stocks like Newmont have done extremely well on the back of the run in metals like gold and silver, as people have sought those safe havens. Remember, early in the year, we're talking about negative interest rates around the world. It makes those non-yielding metals look even more attractive. So now, with the prospect for some clarity here, a potential Clinton presidency, I think it makes these safe haven assets somewhat less attractive, meaning we should be a seller of bonds. Interest rates move higher, and in that environment, you're also selling some of these precious metals, which should in theory put downward pressure on a stock like Newmont. And I think the chart is starting to reflect that just a little bit. You're sitting on that 200-day moving average here. I think if we continue to see dollar strength, higher yields, you're going to see metals go lower, risk assets move higher, and a stock like Newmont is going to break below that 200-day where you want to be a better seller.
Gina, just really quickly, he mentioned a motley crew of stocks. We look at these 5 companies, and they're from all kinds of sectors, right? You got chicken, you got mining, you got video games, you got tech. What does this tell you? Is this just these 5 companies really did well in the last year and a half, or is there something broader, because it's not like they're all from one particular industry?
No, I mean, obviously, we've pointed out the obvious pieces. I think that you look at the first tech plays, right? That's Nvidia and Amazon. And but when you look at the 2 kind of more defensive stocks, right? Tyson Foods, and as Rich is pointing out, Newmont Mining, in fact, would be a defensive play on the precious metals side. I do actually think that it is still telling a story of defensiveness, and that the rally that we've seen in the tech space has really gotten out over its skis, and those multiples are extended now, and we're starting to see some misses on earnings and vulnerability. So look, I think this is telling you a story of 2 worlds here, one where there is optimism and one where there's defensiveness.
All right, thanks, Gina, and thanks, Rich, for joining us here on Trading Nation. Thank you to everyone else watching. Join us next time.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here, and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.